Let's go.
Hello, everyone, and welcome to Zephyr's Adjusted for Risk podcast from the shores of Lake Tahoe. Now, one of the hottest topics in the wealth management space is the great wealth transfer and how financial advisors can successfully transition uh, from older generations of investors and clients to the younger generations who have different expectations and different demands. The pressing question remains, how do these financial advisors connect and build lasting relationships with millennials and Gen Z cohorts to maintain a sustainable practice after building successful practices on clients of different generations? Now, obviously, look at me. I am the last person you want to get advice from in terms of how to connect with younger generations. So I have brought on a great guest who is much better suited to help answer these questions and help us understand the expectations of younger generations and how to connect with them. But first, today's episode is sponsored by the award-winning Zephyr, which helps advisors, wealth managers, financial analysts, and investment professionals make more informed investment decisions. So I'd like to welcome Jeff Mattonelli, who is a financial advisor at Van Leeuwen and Company on the show. Jeff, thank you so much for coming on the show. Can you just start by telling us a little bit more about yourself that may not be listed in your bio or that I mentioned earlier?
Yeah, absolutely. Well, first, just want to say thanks to you, Ryan, for the opportunity. Happy to be here today and talk about this topic of the great wealth transfer and millennials. And again, as you mentioned, right, very timely topic, very important. So yeah, again, right, my name is Jeff Mattonelli. I'm an advisor here at Van Leeuwen and Company in Princeton, New Jersey. So I've actually spent my entire life in Mercer County, where Princeton is located. So, my fiance and me, we actually just recently bought a home last year, actually in the same neighborhood that I grew up in. So,
Cool.
Kind of building our roots now in the town that we both grew up in. On the same street that my parents live on. So, yeah, it's great. We find a lot of opportunity here, and we really like the area. So. Excited to continue to build in Mercer County and Hamilton, and yeah, continue to grow our business here at Van Leeuwen and Company. So
That's awesome, Jeff. Hopefully, you got a year ago, you got some lower mortgage rates than what we've seen recently at 8%.
Yeah, absolutely. Yeah, the timing of it worked out pretty well. So we're lucky in that regard.
Well, congratulations on the house.
Yes.
And, as all of our viewers know, I live out here in Lake Tahoe. I'm
Yep.
originally from Wisconsin, and there definitely is something to like being close to family, right?
Yeah.
It's a lot easier to walk down the street than having to catch a plane and fly halfway across the country. But
Yeah,
that's awesome.
absolutely right.
Good for
Yes,
you.
thank you.
And then hopefully interest mortgage rates will come down and maybe you can refinance back down the 3.5%.
Yes, yeah, absolutely right. That's the plan.
Right. So let's start with investor expectations. Our listeners have a better understanding of what millennials and Gen Zers expect from services sector, particularly the financial services. So what are some of the expectations younger investors have when they go into a relationship with a financial advisor?
Yeah, I think that's a great place to start because, again, I think millennials and younger investors in general, right? This may be their first foray into financial planning and thinking about their financial futures. And so I think there are sometimes a lot of misconceptions about what a financial advisor does and really who a financial advisor can or does serve, right? And so I think a lot of younger people that we come across, they think a financial advisor is just someone that manages investments for you, right? And gives you investment advice. And from our perspective, right, in the way that we work with our clients and, millennial clients and all clients, right, is the investment part of that process is really just one piece of a much larger puzzle, right? And so I think what our goal is when we're approaching, millennials and younger clients is, helping them understand the other areas that we can work in with them, right? And really get them into a position where they're prioritizing their goals, right? Organizing their financial lives, both investment related and otherwise. And I
Mhm.
think, helping them understand that, right, it goes much further than just, which stocks to pick or where to put their excess money, right? It's looking at things like workplace benefits, right? How can they maximize those opportunities that they have, right? Different types of insurance coverages, even things like helping them, build and maintain a budget, right? These are some very basic things that, people either don't prioritize or, it seems very overwhelming, so they don't dive into that process. And, our role as financial advisors is to help them, start taking smaller steps on that journey for, financial success in the future. And so I think, again, it's helping them maybe shift their expectations or
Mhm.
change some of the misconceptions that they have about a financial advisor and what a financial advisor does. And when, we're able to do that in a good way, right? That can be a light bulb moment for them to realize that, there are a lot of other opportunities and areas that, they haven't necessarily thought about, and we can, help them realize that and then help them plan in those different areas. So again, I think our thought process from that perspective, right, is we want to focus on financial planning first, right?
Yeah.
Looking at tax planning, investment planning, again, being a part of that, right? Benefit planning, even estate planning for younger clients, right? Something that's oftentimes
Yeah.
overlooked. And again, it's all about, right, organizing everything from the top down and getting started on a plan that can, of course, be, you know, changed, managed, and, you know,
Yeah.
on an ongoing basis, essentially. So
Jeff, you made some fantastic points there, and it's really interesting how I'm going to date myself here. When I started in this industry, you were a lot younger, probably in high school maybe, but when I started, it was a lot about stockbrokers, right? It was
yeah,
about stock picking, and
right,
that's where you would go as an investor. If you wanted to buy or invest, you had to go to a stockbroker, right?
right, yeah,
And it wasn't so much financial advisors back in the day. Now it's really evolved. Now financial advisors or stockbrokers, you're not getting paid for investment management. Those fees have dwindled so much. You've got to do other things like doing a financial plan. And it's really changed, really, I think, since the great financial crisis, where
yeah,
now it's such a bigger emphasis on the holistic view, right? That investment management piece is such a small
yeah.
sliver of it. And honestly, Jeff, you made a good point. It's that financial plan that is more important than just the investment management. Um, Great
Yeah,
point.
absolutely. Yep. Yeah, and we definitely subscribe to that idea.
hmm One of the traits of millennials is that they rely on technology, and technology is such a big part of their day-to-day um, process. And using technology to gather their own data and information, how does that change the role of a financial advisor when working with millennial clients who now can gather an abundance of data and information at the tip of their fingers versus older generations?
Yeah, it's a great question and a very important piece of, what we do, because as you said, right, there is just a myriad of information that's out there on so many different platforms that it can really become overwhelming for someone that's looking to get started, whether it's
Yeah.
in, again, investing, financial planning, right? They're taking in so much information, some of which, is timely, is accurate, is, potentially usable and able to be implemented, and others that maybe, you know is flat out inaccurate or just does not apply to their specific situation, right? And so uh, again, I think from two different perspectives, right, that presents a challenge for financial advisors. One is that, because there is so much of that information out
Mhm.
there, that could, leave a millennial or someone that's looking to get started on that process to think that, I can just handle or manage all of this on my own,
Yeah.
right? There's so much more access now to things like, robo advice, artificial intelligence will continue to become a challenge. Um, so again, that might preclude some people from reaching out or being in touch or engaging with, a financial advisor because they feel, hey, I do all of these other things on my own, right? I can manage my finances on my own as well,
Mm.
right? I have all of this information, at my fingertips. So that's one challenge. Again, we look at it in a bit of a different way, is that, right, because there's so much information, right, access to quick information, right, things like a 30-second TikTok video, or a tweet, or I guess whatever they're calling it now, right, on
An X.
Elon Musk's X. Yeah, right, exactly. So again, there's so much of that quick information that's out there. From our perspective, right, engaging in a financial advisor can help you really sift through all of the noise, right, and help you understand, okay, which pieces of this information first, right, are accurate, right, and how can that potentially be implemented into a financial plan for you, um, and then, right, which pieces of this information, even if they are accurate, right, do they apply to your individual situation, right? A lot of the information that's out there is more generalized
Mhm.
information, right, that doesn't pertain to someone's specific situation, right? And our perspective on financial planning is that, no two people, no two couples, right, no two families are exactly alike, right? Everyone has nuances or different, aspects of their life that need to be considered when coming up with a financial plan, with an investment allocation, right? Things as simple as, your tax situation, right? Your
Mhm.
income tax situation driving a decision to utilize, a traditional IRA versus a Roth IRA, right? Something as simple as that, someone may see, yeah, okay, I can utilize a Roth IRA and that's going to be tax free forever. Well, what are some of the rules that are associated with that, right? And then
Mhm.
further, how do we properly invest that money to get you the growth that you require, right? All of those things, um, in our opinion, right, is very important, and makes the role of a financial advisor, that much more
Yeah.
important. Is, helping them sift through that information, answer questions that they have. Again, while information on the internet can be very powerful and valuable, frankly, right? We don't think that there's a replacement for, having a personal conversation, and having someone that you can trust and rely on to,
Yeah.
you know, answer your questions, give you advice in the context of, your individual situation.
That's a great point. You mentioned, all the misinformation out there, and now millennials or younger clients, and I keep saying millennials, but
Yeah,
even older generation, they're getting more
yeah,
accustomed to using social media to get their
yeah.
information. How does that is you mentioned challenges and misinformation out there. Does it make it more challenging for you as a financial advisor that you got to stay abreast more of what's going on out there? What's being said? What are clients hearing and reading? Years ago, it was just what's going on in the market.
Right.
It's easy to stay on top of that through the Wall Street Journal or CNBC or Bloomberg. Now you have all these alternative or non-traditional sources.
Yeah.
Do you have to do a better job of staying on top of what your clients are reading or hearing?
Absolutely. And again, that is important from two different perspectives as well, right? Because again, if we are someone that's providing value to our clients, right, and we feel that we are, right, it's
Hmm.
important that we understand all of that information that's out there, again, because some of it is very valuable, and may apply to their lives, right? So if they're reading something that they feel is, interesting or can help improve their financial situation, right, and they come to us with that, right, and we say, oh, yeah, that is a good idea, they could think, okay, well, why wasn't this strategy brought up to me previously, if you were aware of it, right? So it's very
Hmm.
important for us to stay on top of, changes from a legislative perspective, from a market perspective, right? from an investment perspective as different products come out. So that is very important. The other side of that is, again, right, we talked about not all information is created equal. They might come to us with a question about something that doesn't apply to them. So it's important that we can help them understand, right, why we maybe haven't recommended a strategy or something that they're reading out there as a good opportunity. So yeah, again, it keeps us on our toes. We have to be very knowledgeable and mindful of the changes that are taking place in the investment and economic world. And again, so it's good, right? It does present an opportunity for us to establish ourselves as knowledgeable people on these topics that are important to them.
You bring up a good point. When I started in the industry, I worked with a very knowledgeable financial advisor, and he was very, he was always had a great outlook on things. One of the things he said, whenever there was a challenge, he said, this brings opportunity for us to separate ourselves, right?
Yep,
It might be
exactly
a
right.
challenge, but if we spin it right and learn about it, we can make this an opportunity for us.
Yep, absolutely.
And during that same time period, I had mentioned earlier, it really wasn't that long ago. At least I like
Yeah.
to tell myself it wasn't that long ago, but we went to the Wall Street Journal and CNBC and Bloomberg as our primary source of information.
Mhm.
That's changed. And you've mentioned it. But where do millennials get their investment ideas, strategies, and information from? Are there specific places that they go to?
Yeah, I mean, again, I think we talked about it a bit. I think more and more, right, millennials and younger generations, where they're getting their information from largely is social media, right? Places
Mhm.
like X, Instagram, right, TikTok for that matter. Uh, Again, right, so much has transitioned into, shorter, smaller, bite-sized pieces of information, right? And those platforms offer that, right?
Mhm.
Um, Again, and it depends on each person's situation. I
Yeah.
think some people that are very focused on financial matters and things of that nature, they do still utilize things like the Wall Street Journal or Barron's, Forbes, right? These business publications, which again, in our opinion, would provide uh, a fuller picture of the information that they're looking for. But I think more so, a lot of people, they see a video or they see a tweet, and that sparks their interest, right? And then they start doing research on their own about whatever that topic may be. Um, so again, I think understanding that, right, we've bolstered our use of social media as well, right? We want
Mm.
to present ourselves as thought leaders in those areas that are important to them, right? Some things as simple as managing their student loan debt, right?
Mhm.
Mortgages, right? Managing their cash flow. It can be things that are that simple, but what are the important topics to that age group, right? And how can we get our information out there on the platforms that they're consuming their information?
Interesting. So, do you guys and do you believe like financial should they go to these spaces? Make sure maybe you have a TikTok awareness, presence, Twitter presence on social media in order to get yourself out there in front of millennials who that's where they go to get their strategies. Is it important to have a big social media presence?
Yeah, so we think it is very important, right? Because the process that a younger client, in our opinion, right, will go through is, if they hear about our company, if they're doing research on looking for a financial advisor, right, where are the places that they're going to go to look for that information, right?
Hmm.
Of course, we have our website with, a lot of valuable information
Yeah.
on there. But they may go to a Facebook or a Twitter, right, or an X, and search our company, right? So we want to have that information out there already, right? When they look up our company on Twitter, they're going to see, right, consistent posts about, right, pertinent information that's out
Hmm.
there, right? And we think that that's very important. Again, as a first impression, right? If they can see
Yeah.
that we're active in those spaces, we're thinking about things that are important to them. That's just going to lead to a better representation of who we are, and give us the ability to connect with them before we even have the opportunity to have a conversation with them.
Interesting. Yeah, one I see this a lot on, so specifically Twitter. There's some people in this space that are very well respected marketers and helping
Yeah,
financial advisors market, and they throw out a lot of stats there that a lot of investors now get their information from YouTube.
yeah,
Right. And it's important now. You're seeing a lot more podcasts like we're doing, or
yeah,
videos, and people leveraging YouTube as a place to market themselves and get the, so people can find out who you are as a financial
yeah,
advisor, but also as a person. And I just, 3 years ago, maybe even 5 years ago, thinking YouTube was a place to market your financial
yeah.
services would have been, I would have been like, no way.
Right.
Right.
Yeah,
So you got to think a little bit outside the box there.
that's right.
Through this conversation, it's kind of like you guys are more educators. And as a financial advisor, you almost have to become more of an educator. You have to wear multiple hats, right? You
That's
just
right.
can't be good at investments. You got to be good at a lot of things. Is that the case? Are you guys really more educating millennials than being a, investment manager?
Yeah, absolutely. I think education is, really one of the cornerstones of how we can provide, superb value to our
Mhm.
clients, right? From our perspective, right? Some of the financial concepts and things that we may recommend can be very complex in nature, right? So it's not just our job to make a recommendation and say, we're professionals, we know what we're talking about, just trust us, right? We have to
Mhm.
earn that trust. And education, in our opinion, is really the first step of being able to do that, right? It's very important that we help, make the complex simple for our clients, right? And the better that they understand, right, why we're making a specific recommendation, right? What are the pros? What are the cons? How will this benefit them in their financial lives? Right, that makes for a much better working relationship and a much better outcome for the clients as well, right? Because we can project things and say, this is how we expect things to work out. But as we know, right, in especially in the market and in other, financial strategies as well, things are never perfect, right? It's never a linear
Yeah.
experience, right? So when those time periods come, right, when we see periods of market volatility, right, if we just boil down this conversation to, right, investment management, if we say,
Yeah.
this is an allocation that we're recommending, this is, potentially the expected return, right, this is how the risk compares to other benchmarks that are out there, right? When we experience those time periods of volatility, right, they have an understanding of, why their account
Mhm.
value is, decreasing versus increasing, right? And then
Yeah.
when we have those conversations during that time period, right, we can refer back to those conversations and say, right, this is why we're recommending it. This is why we still think that it's a proper recommendation, right? And it helps for, again, a much smoother experience for both the clients and ourselves. So again, I think education is, really
Mhm.
paramount to what we do as advisors.
Great. You mentioned investment. So going to spin here real quick. What
Yeah.
type of investments are millennials attracted to? Are there certain types, ultra risky? I'm assuming they're not really into short-term treasuries yet.
Yeah, correct. As a long-term vehicle, I don't think short-term treasuries come up all that much with our younger clients. So, yeah, I would say in general, right, most of the millennials, and again, each situation is different, but I'd say, the majority of millennials are looking for opportunities for, long-term growth, right? How can they, grow their money the quickest? And as we know, right,
Mhm.
there's no silver bullet or get rich quick, scheme that makes sense or is prudent, right,
Yeah.
in a longer term financial plan. So yes, I think they're looking for opportunities to grow their assets,
Hmm.
whether it's individual stocks, right? Cryptocurrency has become a lot more popular in the mainstream again, right? And another uh, information being out there, um, about cryptocurrency, things of that nature, right? I mentioned individual stocks. Um, so again, I think that's where we come in as well as advisors, in that, if a younger client, maybe they don't have the most in liquid assets currently,
Yeah.
right? They're in a stage of their lives where, uh, their income potential is very high, right? They're earning a lot of money. They're starting that process of saving, right? What is the best, risk managed way that we can invest the money that they do have available, right? And so oftentimes, we'll hear, and I hear my friends, right, who are millennials say it to me as well. It's like, oh, what's the hot stock, right? Give
Yeah.
me a stock tip. What stock should I be invested in? And right, the answer to that question is usually, well, I don't think there is one individual stock that you should be putting all your money into, right? It's more about, and again, helping them understand this, right? Taking a more
Yeah.
diversified approach, right? Utilizing uh, something like a mutual fund or an ETF, right? That is going to provide more broad-based diversified exposure, right? And give you the ability to grow
Hmm.
those assets over a longer period of time, right? These are
Yeah.
time-tested strategies that work, right, over longer periods of time, and they help you to limit the risk but still grow the assets over a longer period of time. So again, it kind of all goes back to the education
Yeah.
piece, right? It's a very important part of the process.
It's funny that you bring that up about you have friends that ask you what's the best stock, and I get
Yeah,
that often too. And I'm not a fan of, I think more strategy. I'd never
right.
get into the weeds on individual stocks. It's all about asset allocation, what
Yes.
are different sectors or regions. It's and every time, whether I go out to a bar, right, and somebody asks me what I do, and I tell them, they go, "Oh, what's the best stock? What do you recommend?"
Right.
And it's not that easy. I don't, you
Exactly.
know, you really want the boring answer. It's diversification and all that
Right.
stuff. I don't provide them the answer that they want.
Yeah,
Um,
exactly.
so what are whenever we think of millennials, and I hate to say this, Jeff, not to bang
Sure.
on you and your friends or
I,
anything, but
I won't be offended. That's okay.
there's a lot of, should I say, misconceptions out there of
Yeah.
millennials, right? Oh, they're lazy, they want handouts and all this stuff. What what are some misconceptions of millennials and maybe things that you hate to be associated with?
Yeah, well, I think the first two that you said, I don't like those two mentioned. I do actually think that those they are misconceptions, right? I mean, again, I'm sure that there are millennials that fall into that category. I think what we see, at least in the millennials that come to us and want to plan, right? They're very motivated. They're very conscientious and thoughtful about what they want for themselves and their families, and they are interested in planning, right? It's really uh the issue is, again, goes back to kind of what we were talking about earlier. It's there's so much information out there, right? How do I get started on this process without making a major mistake, right? Because again,
Mhm.
financial information and financial decision making can be really overwhelming for people. And again, I think what we find is that even for the people that maybe do get that label as being lazy, or they want a handout, right, or they're not being thoughtful about what they need to do now so that they can be in a position for success later. um, I don't know that that's necessarily the case. I don't know if it's being
Mhm.
lazy is what's not driving them to make those decisions. I think it can sometimes just be you know paralysis from so much information that's out there, that it's too overwhelming for them to get started, right? They don't even
Mhm.
know where to begin, right?
Yeah.
So uh, again, I think from what we see, it's the millennials that we work with are incredibly motivated, and they just need maybe a push in the right
Yeah.
direction to get started and work on those things. So
I sometimes think if millennials, it's not so much a millennials' fault, that maybe they want handouts, or it's not even millennials, any kid, any younger generation, if they want handouts, expect handouts. That's not because of the generation, that's
yeah,
because of the parents,
right,
right? The
exactly,
parents have
yeah, yeah,
probably been babying them, giving them handouts and all that stuff, and
right,
giving them trophies for coming in last place, right?
yeah,
Um, I personally think it's more of a parenting issue, but
yeah, yeah.
I'll get off my
No, and
soapbox.
but again, I mean, you bring up a good point too, right? Because if I think about my parents and their generation, right, the baby boomer generation, it, you know, the the economic environment, the time period was very different than it is now, right? I mean, there was much less technology, right? My parents, came out of high school and they immediately went to work, right? So they were, almost forced to you know develop good habits and save money and do all of these things, right? Just they were forced to, right? It was trial by fire, if you will. And again, because of the hard work of our parents' generation, right? A lot of people, and again, not to speak for everyone, but to speak for myself, right? I was in a position, much more privileged position, right?
Mhm.
Where I knew the value of working hard and doing all of those things, but right, I wasn't, forced to move out of my house when I was 18 years
Yeah.
old, right? I had the ability to go to college and get an education and had a frankly a much easier,
Yeah.
upbringing, right, from that perspective. So again, I think for millennials, right, it's just seeking out the right information, working with people that you trust, and you'll be on a path to financial success. So
Fantastic. That's awesome, Jeff.
yeah,
Real quickly, last thing, fun
yeah.
story. End the conversation on something fun, something interesting. We have a couple minutes left. It could be business related, something that maybe you didn't expect this industry to be like. When I started in this industry, working at a more of a brokerage house, come um, closing time, the closing bell, all the financial advisors, they get out their bottle of whiskey, right, and have a
Yeah,
drink.
sure.
That's not the case anymore. At least I don't think it is. But
Yeah,
anything
no.
fun that maybe it doesn't have to be work related either.
Yeah, yeah, sure. So I thought about this one a little bit, the question. So just kind of random, which I thought was pretty interesting. But I mentioned earlier, right? I'm engaged, so we're
Mhm.
getting married next year. And I found out recently from a cousin of mine, actually. So where we're getting married, it's about 30 minutes or so away from where we live in Hamilton, and so we're
Yeah.
getting married at a church there in that town. And I mentioned the name of the church to my cousin, and he said, hey, that I was just reading Bruce Springsteen's biography, and that was his childhood church. His house is right across the street from the church that we're getting married in. So being from New Jersey, I think it's kind of
Yeah.
a rite of passage. You have to be a Bruce Springsteen fan. So
Right.
yeah, I thought that was a pretty cool piece of information. I just learned that last week. So
That's awesome. That is a
yeah,
good story. Maybe Bruce will be there that morning or
yeah.
something in the neighborhood. Very cool.
Yeah,
Well,
who
if
knows? We'll send him an invitation. We'll see.
yeah, there you go. That is a good story. Well, hopefully, we'll talk before then, but good luck
Yeah,
with that. It's always an
absolutely.
exciting time, and hopefully it won't be too stressful the next few
Yeah,
months.
next
But
couple months, exactly. So
yes,
yeah, I appreciate that. Thank you.
my story isn't life changing or anything like that. It's what in the world is going on with the University of Michigan and college football.
Oh my
It's
goodness.
absolute chaos. All it's like every day I read something, it twists and turns. Now they're blaming Ohio State and Rutgers, giving
Yeah.
signals to Purdue. It's like,
Yeah, what a bizarre situation. I know. It's it's really interesting because like you said, it's kind of gotten turned around now that all of these other, Big Ten schools have information on Michigan's signs.
yeah,
So
it,
yeah, it'll be interesting. I'm, as a college football fan, I'm hoping that it all gets, figured out, of course, but it would be a shame if, this
yeah.
Michigan team that's playing so well right now is somehow kept out of the playoff because of it. So we will
I
see.
think it'll turn into a legal battle if
Yeah,
the Big Ten tries to like suspend Harbaugh or something. It'll
yeah,
turn into a legal battle. Nothing will happen this year. They'll go to
right.
the college football playoff, and then during the summer, Harbaugh will be in the NFL.
Yeah, right.
He'll go to the NFL, and then by time any penalties come down, it'll be left down to the players. They won't be able to play, or something will happen to the players. Harbaugh will be off
Correct.
in the. It's
Exactly.
like I don't know.
Yeah,
it
it'll
just
be the
sucks for the
players that
players.
exactly. It'll be the players that had nothing to do with it that ultimately suffer. So
Yeah, yeah.
yeah, we will see. It's an interesting saga.
It is a saga. You're exactly right. And someday there's going to be a 30 for 30 on it, or a
That's right.
Netflix series on it. So awesome, Jeff. Well, thank you so much for coming on the show. I really enjoyed this conversation. It was a lot of fun. Where can our audience find more information about Van Leeuwen and Company?
Yeah, absolutely. So our website is vanleeuwenco.com. I'll spell it for them, or I don't know, maybe you can link it in
We
in the
will
show.
provide a
So
link. Yes.
that's perfect. So then I won't go through the mundane process of spelling it out, but it's vanleeuwenco.com. We're on X, as we've talked about a bunch, at Van Leeuwen 281. So you can find us there as well, on Facebook. But yeah, check us out. Again, we feel like we provide a lot of value to our clients, and always looking to grow. So
Awesome. Jeff, thank you again. Fantastic insight on such an important topic. Thank you, everyone, for listening to this episode of Zephyr's Adjusted for Risk podcast. You can catch all of our other podcasts on the Adjusted for Risk YouTube channel, as well as on Spotify and iHeartRadio. Thank you, and have a great rest of your week.